Okay, welcome everybody to this evening's webinar. My name is Duncan Cooper. Sorry for the slight delay. My Zoom webinar software needed to re-download for some reason. All right, so let's get into tonight's webinar, which is live Forex market review. So before we get into it, if you can read through the disclaimer. If you're on our YouTube live stream, I cannot see the chat, but you're more than welcome to follow the link that I've given and join us in the webinar. For those in the webinar, you can use the chat box or the question and answer box to talk to me. So please read through the disclaimer. Lachlan, you're asking me, is it a tricky week? Well, we've got high impacted news items coming out for the week, so that's why the markets, as you say, seems a little bit confused and non-specific directionally, because it's reacting to, we've had a reaction to the Bank of Japan data from the central bank. We've had a reaction from the US Federal Reserve early morning. We got the UK interest rate decision coming out a little bit later tonight, and plus we got the US job figures coming out. So the market's looking for data at the moment and then reacting accordingly. So yeah, I haven't traded this week yet, so I'm waiting for these news items to pass, and hopefully then have a bit of a period where I don't have to worry about the news data coming out. All right. Now, if you don't know me, my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor here at ACY Securities, and I am a full-time trader. I've been trading now for more than 15 years and mentoring for more than 10. If you want to contact me, my email is there, duncan.cooper@acy.com. Through the week, you can connect with me on our website, acy.com, go to the Market News tab, or our YouTube channel, ACY Securities Australia. And through the week, you can connect with me on my handles as well at Twitter or LinkedIn. I'm putting some content through there through the week. As well, we have our Telegram channel. If you'd like to get access, just contact Nathan.bray. And if you want to get access to my chart layouts and templates, then Nathan will sort that out for you as well. So I'll just put his details in the chats, and you can contact him if you need any help with maybe setting a demo account up, or if you're interested in a live account, just contact Nathan. All right, so let's get into the charts. But before we do, we'll just move to what is coming out on the news front. So over the next couple of days, hopefully my screen's changing as we're moving along. All right, so tonight, these are Queensland time, because I'm in Queensland. So 10 p.m, we have the UK interest rate decision. Not expecting a change there. We may be getting a change in the votes. So 2 to 7 would mean that 7 members are voting for no change, 2 are voting for change, whereas last time it was a 5-4 situation. 5 voted for no change, 4 for change. So they're expecting that more will be erring on the side of no change now, and the market will be looking at the votes as we're not expecting any change in the rate, and then determining what does that mean. All right, so that's the big item for the UK. We have US unemployment claims coming out at 10:30 p.m. We have tomorrow then the job figures for the US, okay, and Canadian job figures. But primarily the big driving for the market is the US job figures. So has been a week of very important data from the US. All right, that's why the market's been rather uncertain. And we had important data from the Bank of Japan on, what was it, Tuesday afternoon. All right, so let's get into the charts. We'll start with the US dollar index. Now, I just want to refresh my chart because there's a bit of a gap there. All right, we do have a gap. So we are still holding this uptrend on the day chart, but we've had a bit of rejection up here. Are we going to put in another high bottom? Trend's not changing on the day chart here. It's just pulling back to maybe put in a higher bottom. More importantly, on the weekly chart, we are holding above this area here at 105.87. All right, so we don't know where the week will finish. We obviously have important job figures coming out on Friday, and we could be finishing negative or positive for the week by the end of the week. If we have a very positive week by the end of the week, after the job figures, we could be then seeing a move up to test 107.67 through this month, this area over here. So really the job figures are now in focus to start to then see maybe how the month's going to start to unfold. All right. Now, S&P 500, I did say potentially we're going to have a rally back up within the weekly movement. And on the back of the market's interpretation or reaction to the FOMC statement, which in my mind, there wasn't really any difference from the month before. So, but on the weekly scale, for the S&P 500, we've moved up to the 50% point, just shy of the 62 level on a rally, and then hit the 127 extension. Now, I keep hammering this home to you guys and girls, that when price is down in these areas, it's not where you want to be selling. There's a high chance that price will then have a corrective rally back up. All right, and that is what is happening. So now really, from a weekly perspective, it's rallying back up within this range. So as we drop down to the daily, I would be anticipating that we're coming up to the 62% level or up to resistance here at 43.23 and the 79% level. All right, so it's back in the corrective phase of the market. So trading with the trends, long term, you want to be looking up here in the area of the 62 to 79% area for the market to top out and then turn back around for then the next move down towards the next 127 extension. Okay, that's how the market works. It moves down to 127 extension. That's where it's bottomed out currently on the current range. And now it's doing its corrective thing. So, look for it to come back up into the area where it normally finishes the correction. And then look for your setup to sell. All right, let's get into the euro dollar. Now, this week we've already failed once up here, well, higher than the 106.35 level, which is this area that I've been watching for quite a while. It's getting rather messy because that's a lower top and we do have a fractionally lower bottom, but it's not wanting to move below weekly supports. So which way is it going to break long term? It's very difficult. High time frame trends are down, like the weekly trend is down, the monthly trend is down. So I've been trying to pick my battle with this pair to the downside, but it could break to the upside. If we get a very good close this week, maybe above 106.35, this area here by the end of the week, maybe we're moving up this month. All right, but it's too early to tell. We could be moving down for the month. At the moment, I would still be watching 106.35 through the course of the week. We've been up here early week. Then we moved down to there. And for me, the best area is up here. Right, 106.35 is the major resistance, plus there's a 79% fib at 106.40. Now, I don't know whether we can get there today, but that's an area I'm watching at the moment. Okay, these two moves here, up and back below, and then up and down. False breaking this area, which is where we held at 106.35 earlier in last month. So I'm looking up here. You could be looking at the 106.16 level and the 62% level at 106.13, even to the 106 level. That's a lower level. So I always like the higher level because it offers me better risk reward. But you could be monitoring both of those levels for a turnaround, okay, over the next 24 hours. Just want to have a look on the 15-minute chart over here. So you can see there at the moment, popped up from the FOMC yesterday and today. It's not got too much strength above 106 at the moment. We do have some US dollar claims coming out, the job claims coming out later in the day. So that will maybe give it the opportunity to spike up to the 62 or the 79% level. And then what happens for the rest of the day? It is worth noting as I'm looking on this 15-minute chart that over to the left, there is an imbalance over here that occurred back on Tuesday. So price may want to come back up into and fill this area, which, you know, is much more closer to the 79% level over here. So, you know, this is the area I would be looking at for price to get up to today, and then look for the opportunity to trade back down with the dominant trend that we've been seeing in general terms on the higher time frame. Now the euro yen, it's not able to hold above this top. Folks broke it last week, and we're folks breaking it again. We did close above it. It's difficult because yen's weakening because the bodge statement this week. So the trend is up on this pair. We're just at very historical high points and where the price can fail. So if you want to actually trade with a trend, this area here where we've broken above 158.65 would be the area to start to look for maybe an opportunity to get long. If you're wanting to trade down from resistance, well, a retest of resistance and failure would be the go here. But, you know, to the 4-hour chart, if we look at the day chart range there, you know, best buying area would be down here to watch for reversal and a setup to buy. All right, and the best selling area would be, if we go back to the day chart, there's two tops here. There's 159.91.3. Get the right tool. So very close to the 160 level. These two highs up here. So if we drop down to the 4-hour chart, today we're not able to actually get up there today. So maybe we are failing up here to at least come back down to support. All right, it's a little bit in the middle of nowhere just to get short, because further up would be better. But if we drop it to the 15-minute chart, I will still be waiting. You know, if I go back to the 4-hour chart, I was watching this area yesterday. So this is the area down here for the buyers if you're looking to the buy side. But just wanted to point out for those, you know, what I was looking at yesterday, this 4-hour chart where we moved up, and we have this very kind of large, almost spinning top candle. And we came down to this level, just there, then moved back up. Then this came down to that level and moved back up. So I was monitoring this area for a break yesterday, these two lows. All right. So look, I was watching for a move underneath here yesterday. So that was really where, you know, selling in here, stop above here. I think I mentioned that yesterday in the webinar. That was the opportunity when those two 4-hour candle lows here got broken and price wanted to remain below them. All right, today we're not able to come back up to that area. So that area is really, you know, there's those spikes down on the 4-hour chart to the 4-hour lows, but you can see the spikes on the 50-minute chart here. Was getting support at 159.75, but today we're not able to get up there. So today, any upticking, these two day chart highs here, 159.75 and 159.91, could get up to 160 maybe. But up here would be the selling area. All right, there's the selling area up to my explanation on the 15-minute chart. And your buy area, I mean, don't forget what the trend is on the day chart at the moment. It is up. We'll be down in this area here. All right, at the moment you can see price is kind of in the middle of those two areas. So now where does the news drive price a little bit later in the day? Now the euro pound, this is my weekly chart look. Now I've been saying on the monthly chart that we are in a downtrend, lower top, lower bottom. So this is kind of corrected back up at the moment. And it's struggling at this old monthly top over here, 87.21. And then we've got weekly lows in here that were sitting on top of that top when price was here, and then it broke below. So the last 3 weeks, you can see it's been trying to trade above that area, but it's false breaking. So if you like the euro pound to trade, well, it looks like we're at resistance at the moment. So whilst the trend is up there on the weekly chart doesn't like it in that area. And we've got a very nasty rejection down. So really, are we dealing with a reversal? So on the fire chart here, draw a fib. And, back to the day chart, you got this top up here. We could have a head and shoulder pattern forming if we run it back up to this level, 87.40. Right, left shoulder, head, 79% levels just short of 87.40 at 87.38. So that would be the area that I would watch for maybe that pattern to form if you want to trade the euro pound. All right, now 87.21 is monthly resistance. So for that pattern to form, we have to get back above monthly resistance. Maybe price can't get above 87.21. So that's another level that you could watch for failure. But if you follow my analysis, I'm always generally looking at the high level, the 79% level. All right. And especially with that possible head and shoulder pattern, that would be the level to watch up there. All right, getting to the pound. Really, until we get past the interest rate decision today, life's difficult for the pound. But, the weekly trend and the monthly, well, I think the monthly trend is actually still up. It is still up here at the moment. Higher bottom, higher top. But the weekly trend is down. So lower top, lower bottom. We put in the lower top here. Yes, it's been rather sidewaysy here. But a nasty rejection last week up at daily resistance. And we formed some form of left shoulder, head, right shoulder scenario there. It's getting messy here at the moment. It's very range bound. Can't commit below 121.10. So that's one level to watch, because if you get back down to 121.10 to 121.100, if it doesn't want to move through, that's the buy level. With the weekly trend being down, and this is the range of last week from high to low, we may see a move up to the 79% level. There's a bit of an imbalance in here that may need to be filled this week. All right, the imbalance, actually, the top of the imbalance is where the 79% level is. So today, I'd like to be trading with a trend. So if it can get up to 122.41, things get really aggressive. It could come back up to resistance at 122.71, but I would be focusing on, can we come up and fill this imbalance to there? Well, then another move down to challenge 121.10. And can we start to maybe move down this month? This pair at the moment could go either way. And the news today from the UK with the interest rate decision may determine the direction for the month. All right, so that's what I'll be looking for. You can see below 121.10 here. Every time it gets below, it moves back above, tries to get below, moves back above, tries to get below, moves back above. So, that's where support is, and that's where resistance is up there. And at the moment, we're kind of in the middle. All right, so with a lot of these pairs that are range bound, trade the outskirts. And we're not at the outskirts at the moment, we're in the middle. All right, heading over to Aussie yen, which has had a very good run up. It's been difficult, really, Aussie yen, because last week, last 2 weeks we've been rejecting up here. It was kind of maybe signaling we're going to go down in the new week from last week, but no, the Bank of Japan kind of scuppered that, and back up to testing the monthly area of resistance. Go to the monthly chart, it's this area here, 96.87. I think today we've been up to, I'm going to call that 96.87. We've been to 96.80 today. And this is a good selling area. It's been proven before. And 1, 2, 3, 4. So 4 months, 5 months, including this month, which is a new month, is all occurring within this large candle. All right, we're not able to, for 4 months and a bit, get above that high point there. It's all getting contained at this high to the left. So the question in my mind is, are we at resistance once more to move down? Or are we going to break out? So need some more information at the moment. Got a very positive weekly candle, positive day candle at the moment. Now, if you put in a significant kind of reversal candle today or tomorrow up at this level, and we see a nice candlestick reversal pattern up here, then we could well be moving back down. You know, this is your major resistance area up here, and at the moment, your major support area is down here. So, you know, what last time we got up here, we've traded all the way back down to here. So could the same thing once more occur? It's not an area I'm going to be buying at because, you know, if you want to be buying this pair, you should have bought before now because you're trading into resistance at the top. This is really where you want to take profit if this starts to falter up here. All right, now I'm not seeing anything to do, not seeing the 4-hour chart change here at the moment, but this is the clear, you know, clear top of the range. And from a large range perspective, it's this high to low. So you could, if you want to be aggressive, you could trade up here, shorts. On a pit stop above, you could put your stop at the 127R, but that's slightly more than 100 pips. So I'll probably just go 100. Or because it's a large range, if we're going to see a failure up here, trade back down to the major bottom area of the large range. You could look to a lower time frame to see it start to trade back down. So at the moment, just monitor the 4-hour chart. Not showing a reversal yet, but what does it show you over the next 24 hours? That's the area to watch for a reversal if that's what's coming around. It's not the area to be buying into. You know, at the moment, if you want to be buying the Aussie yen, you're going to need to see now a breakout above this area and this area becomes support. So the market will definitely know that this is a key resistance area when we get there. And as we get to when we get to the euro yen, if you go back and have a look at last week, well, actually, we've actually covered the euro yen already, sorry, but if you go back and have a look at it, when we came up to the significant high point last week, we came up, tried to trade above it, and then we just sold all the way back down last week. So the same sort of scenario could happen on this pair this week if we come up to that level. Well, it might not be till early next week when we get to the level. We'll have to wait and see. All right. But the 50-minute chart is just showing you a trend at the moment. I mean, you could get long with a very tight stop at the moment. You could get long with a tight stop maybe just under here if you wanted to get long, or maybe the possibility of a breakout. And, you know, you could be risking about 15 pips or so for the possibility of breaking out through up and above there. But I think, you know, that's just really having the fear of missing out. Because if you wanted to get long, you could have gotten long yesterday or the day before. Why are we getting long so close? But, you know, that could be a play if you wanted to trade a breakout. But I think, you know, if you want to get long, you should have been long by now. All right. So still showing upward momentum at the moment on the chart. I've just been monitoring up here to see if we can get a failure. Now the Aussie, getting very close. This is my 4-hour chart. This is last month's high, last month's low. There's the range. We may well be having a month up this month. So that's the range of last month. It's been very tight, choppy, and there's maybe an expectation, or it's maybe getting priced in at the moment anyway, that we might get an interest rate hike next week. And at least we may come up and re-challenge this monthly broken support level, being resistance at 64.58. Now, we could trade above there, but what I can see, you know, the dominant longer term trend, right, isn't up. There's the monthly trend, it's down. All right, lower top, that's a lower bottom. We've come down into a bit of a support area from over here. All right, well, the longer term trend for the whole year is down. And on the weekly chart here, even if we trade above last month's high, that doesn't change the trend on the weekly chart. It just means we're having just a month up. We could just false break the high of the month. And there's the range from the weekly chart down to the daily. 79% level overlaps perfectly with that resistance level over here to the left. So that it looks like a perfect level to look at. All right. So having done that analysis, there's the level to watch over the next. Doesn't mean to say it has to get up to that level. We could false break last month's high. That's monthly resistance, the weekly 79% level. 64.59 is that area. 64.58, 64.59, okay? So we're getting close. So we may well see Aussie dollar, Aussie yen come up a little bit higher. And then do we hold? Price may be wanting to come in some form to fill this little bit of an area of imbalance here. All right. And the job figures tomorrow might just spike this up here a little bit to fill this area too. So up here is the area to watch for a reversal. All right, getting into New Zealand yen. All right, so this range that I've drawn in is the monthly range from last month. All right. This has been a lot weaker than, say, the Aussie yen. Last month's candle was negative. It is in an uptrend, in pure trend. We're at some significant historical high points to the left here from the monthly chart, these highs here. That's why we keep getting selling pressure coming in. All right, now weekly trend is actually up here. So whilst we're faltering at resistance areas, we've had a 79% pullback on the weekly range. All right, we could be coming back up to challenge up here at the top where we've been failing. All right. Now, you can, depending on, it's already too late to really get long. You can't come back down here to get long on support, but support's held through here to get long. Trading further up at the moment, you'd have to be looking at a 4-hour pullback. All right, to the 62 or 79% area of the fib to trade back up the range. We could well be coming back up the range to a bit of an imbalance just in there that hasn't been filled yet. So I'll just draw that in. And, back to, so, on the 4-hour chart, if you want to get long, you'd have to wait for a pullback in my mind, because why buy the top of the move? We could be bottoming here for long-term push up and move through, but you can quite clearly see last month we rejected, came up to put in this lower top here. And last month's range is from this high to low. So there's two sides of the coin here. You could have been trading down here to get long to move long-term up, or you're looking for further failure up at the high of the year. This is a range of last month. So you could be looking in this area for further failure this month. All right. It's too late really to get long in the best area, which was down here earlier in the week. All right. So then the question is, what does it do up here? And of course, if you want to get long, just look for a 4-hour retracement at the moment, because we're at the top of the move. All right, New Zealand dollar. It's having a month up. So this double top hasn't met its target. Doesn't mean to say we're getting a change in trend. It just hasn't met the target, right? So that pattern's kind of finished with now, in my mind. We're now looking at this range. The weekly trend is down. The monthly trend is down. So really, like I was just showing it on the Aussie dollar, we're having a retracement back up within the weekly range at the moment. All right, so in my mind, that's not changing the trend. In my mind, if you're wanting to get yourself set for a longer term trade, you want to be waiting for this to come up to where you would expect it to top out. Could be coming back up to 59.85. That's not that far away in terms of pips. So only 80 approximate pips away. We could be there this week, depending on the job figures tomorrow or early next week. And then looking for this to top out to put the next leg down. That's what I would be looking for. All right, there's lots of resistance up there at the 79% level. Previous tops, once we move below here, resistance, false breaks, resistance, 2 false moves above there to create that double top. So up here is really the area to watch. So it's 59.85 to 59.94. All right. We're only in the first part of the month. In the first week of the month, we could come up to these levels that I'm discussing, top out, and then we're down. We could be trading down for the month. And in the early part of the month, this could be where the market's setting up to put in the lower top on the weekly chart. For then the next move down, maybe we're going to be trading down into the low of the year as we're heading to, through November into December. We'll have to wait and see. All right, so I'm just looking at higher levels. So this is very similar to the, doesn't mean to say the New Zealand has to get up this high, because what I am noticing versus New Zealand dollar to Aussie's a lot stronger. All right, it's further up its range at the moment. So it's weekly range where we're almost up to the area where maybe the selling is going to happen. And the New Zealand's lagging behind to get up to the same kind of area. All right, so the New Zealand dollar might not be able to get up to that area. We'll just have to wait and see what this Aussie does up in that area as we head into the job figures plus the interest rate decision next week. All right, so we've covered the New Zealand dollar there. Now, if you want to get long on this pair, what may happen, if we just move to the 4-hour chart, we're moving above this area of what was resistance. You can already see that maybe it's become support today. So we may well see another as we're moving up this way to the high levels. This may come back down to this area over the next 24 hours to once more find support to continue its move up that way. So if you're wanting to trade the counter move up, then that may well occur. So you could look for that if you want to trade to the upside. But I don't buy at the top of a candle like that. I'd need to see a pullback of some form. And while I'm on this chart before we move along, topic of imbalances. There's an imbalance here. Imbalances often get filled. So when prices maybe gotten a little bit overextended down here, if you see an imbalance up here, and you start to see a reversal occurring, price is probably coming up to fill this area here, which coincides with, of course, the area that I've already highlighted. All right. Right, dollar Canadian is failing up at the monthly high point. You go to your monthly chart, it's here. Are we going to be able to break above, or are we failing there? Are we going to be rather range bound? I mean, we could be range bound for the rest of the year. If you head back to the dollar index a moment, back to the weekly chart, we've been range bound for all of last month. We could just be in this area for the next two months, and life could be difficult and choppy. So the dollar CAD could just hold at the top here and want to trade back down within this range. All right, I could actually get rid of some of these lines off my chart. So on the weekly chart here, we're failing at the top of resistance here, and we've moved above weekly support last week. All right, now we could just move back to here. This is the buyer's level. If all we're doing is just selling down for a little bit, maybe having a week down, we may only want to pull back to this broken weekly top to hold and then blow through this top up here. So if you want to get short, you need to get short on a retest of 38.61, I think, to then look to see whether this can trade down. Because we are, at the moment, there's not a lot more room before we get towards support. All right, support's here. So whilst this is in a 4-hour downtrend, this is a level to watch for support, 137.85, for a movement back up to here. Now, if we were to, for example, to move down to here, yes, you could look at this area for a setup on a lower time frame, but as well, because we're false breaking that high up there, you could then look for a retracement back up to retest that level over the next week to maybe trade down like so. Or that could come over the next 24 to 48 hours. We could quite clearly hit support today, but we could hold there and rally back up through tomorrow, back up to that top up there. So that our anticipate price may unfold like so. So then the levels to watch those levels. Weekly support, 137.85. And we could come back up to retest 138.61 to be resistance. All right. Dollar franc has turned into a day chart uptrend now. We have a weekly uptrend and a daily uptrend and a monthly downtrend. So the monthly chart is this lower top, lower bottom. And the question is this going to be forming a lower top here to continue the long-term monthly decline? Or have we quite simply just false broke this area? Because we could have really false broke here, and we could be moving all the way back up to, the top up here, long term. Always takes a while for the monthly trend to change if it's going to change. So what we are seeing is that the weekly trend has turned up. That's a higher top. This is potentially a higher bottom at the moment. And the daily trend has moved to a higher top. So are we going to be coming down to put in a higher bottom? So, depending on how deep it wants to pull back, I would monitor for a 62 to 79% pullback. There's a bit of an area of support there. So maybe the 62% area here for a move like so. All right, so monitor that over the next week. Does that start to come to fruition? Dollar yen, definitely in an uptrend, but of course, we've actually just gotten fractionally short of last year's high. We did reject that weekly top area here, 150.15 last week. We're just fractionally above it this week. Is it going to be support this week? It's going to be interesting as to whether we can move through here, or are we going to actually fail up here and start to form maybe a long-term reversal? There's always the worry at the moment of the bulge coming back in and intervening. All right, but this is in an uptrend, and we're pulling back to an area of support. We're probably just short of the 62% level at the moment. Just drop to the 4-hour chart. All right, so this was an intervention high. And at the moment, we're holding on the intervention high. So really, this is the buy spot. The news today could just drag it down to the 62% level. So the support area, if you're brave enough to be a buyer on this pair with the worry of intervention, is that area there. There could actually be a lower level with, go back to the day chart. There's this, that could be a little left shoulder inverse head for a little right shoulder to the left there. So on the 4-hour chart is this area here. There's a 79% area there too. So a couple of areas to watch if you're wanting to get long. What is price doing these areas? Do you see a setup for buy on a lower time frame? All right, so those are the potential buy areas for support on the dollar yen at the moment. There is the massive caveat that we've been a fraction short up here of major resistance. And we could have failed up here, and we could see a long-term reversal. But you could obviously look in these areas on a lower time frame. Do you see the lower time frame turning back to up? And do you see a setup to buy? And if you can get your risk out, then well, you monitor to see whether you can move up for a retest of the high up there. The information from the Bodge this week was dovish for the market, and that's what's caused the pair to, the yen to weaken. All right, gold. So this is how I mapped it out the other day. I said, will we get a 62% pullback within the trend that we're seeing on gold, which is up? And if we close back above weekly resistance, which is over here, so if I just dropped the weekly chart to show you, that's a weekly top over here. We close back above, we're trading above that top right now. So if we close back above that top, we could be seeing at the moment a move up like so. A continuation of the trend. So could see a little head and shoulder pattern form on the 4-hour chart here if we were to revisit this area today, where we've false broke the 62% level. So that would really be, if we can come down to this area, so it's 1974, do we form right shoulder down the 4-hour chart to move up? All right. That's one option, or over the next 24 hours, because at the moment we're testing weekly resistance, so you don't want to trade into weekly resistance. But if we were to get a nice close above there today, then you're really looking for that level to be support. I want to pull back on the 4-hour chart for then a move up. All right, so looking at the levels, a couple of scenarios you could watch for price action to form. All right, so that's my thoughts on the levels at the moment. It's not an easy week with all the data coming out from the US. It's worth, hoping that we got a better. I haven't actually looked at the news that's coming out for next week, but let's just have a look at next week. All right, it's worth noting we have the US daylight saving time change on the weekend. So for me at the moment, New York open is at 10 o'clock on the evening. It'll be 11 o'clock for me next week. And for New South Wales, it'll be 12 o'clock. So next week, we got the interest rate from the Aussie, inflation expectation for New Zealand, China CPI dollar. So we don't have much from the US next week. So I'm guessing the week after, let's just go into the week after. Week after, we have the US CPI dollar. So we have a bit of a clear week next week. The week after, that's going to be rather dangerous when we have the CPI data and the PPI data coming out Tuesday and then Wednesday. Those are the inflation figures that are going to determine as to whether the Fed remains on hold, or do they need a further raise, or do they just remain on hold? So we have a bit of a week's grace before the next major big news items coming out. The only massive one for the Aussie, of course, next week is the cash rate. I don't know what the percentage is for a rise or not. I don't know if it's 50-50 or a little bit more on the more than 50%. The IMFM came out yesterday, or IMF, I think I should say it right. IMF, I think it was, came out yesterday saying that Australia should be raising their interest rates. They don't have inflation under control enough. So whether or not the RBA will be listening to that, I don't know. But maybe a little bit of an expectation that we might get a Melbourne Cup interest rate rise there. All right. All right, so those are the things to look out for in the coming week. And of course, this week we have the job figures coming out. tomorrow, and the UK interest rate decision at 10 my time. Where are we? Here we go. All right, just head back. Just want to see what that euro dollar is doing. All right, it's getting, it's not that, it's only 15 pips away from the area that I'm watching. That could definitely get hit today in the red zone of the pivot points too. What is that Aussie dollar doing? It's getting closer and closer. It's just actually had a month up just. It's getting close to the 79% level now. So we're only 16 pips away from the 79% level. It's going to be interesting to see how the market reacts up there, and does it offer a nice reversal. Now, from a long-term trading perspective, this weekly chart, if it's just going to put in a lower top to move down, from a positional play, you could be looking to trade up here, be it at the level that we're at already, or the perfect level is the monthly resistance level at 64.58, and you're putting your stop above the weekly top. As long as the weekly trend can't change, then you're not going to be wrong. So in terms of pippage risk, probably needs to risk about 63 pips. Getting your stop maybe 10 pips above the weekly high there. All right. If you wanted to just take a position at the 79% level, stop above the high, anticipating then that we're going to, on the weekly chart here, we're going to put in a lower top to continue the downtrend of the year. All right. Of course, an interest rate decision on Tuesday could change that weekly structure. But, you could be trading today at that level. Job figures comes out on tomorrow evening, which is maybe US dollar positive, and we're trading down back below 6,400 by the end of the week, moving towards the interest rate decision. So just got to make a choice as to whether you want to trade now or you want to wait for some news items to pass. Okay. It's always tricky. All right, so just give you a heads up, my next webinar is for next week. Next week from me, Tuesday, more analysis. So we will have had the job figures in the RBA statements. Going to be taking you through range trading using Fibonacci on Wednesday, and more analysis from me on Thursday. So I've been talking about how to trade the ranges predominantly over the last month or two. I've really been showing you how to do it, but that is the lesson on it. And in fact, I'm just thinking, going back to my charts, I don't know whether we covered the pound yen, because I know that isn't a range, so I think I may have missed that one. So I just want to show you here on the day chart, because I'm pretty sure I didn't discuss this, so I did miss it. We're holding on support down here. We're playing at resistance up here. And we're going to hold this range through the course of the month. So there was actually a range trade set up. I think I discussed it maybe Tuesday, but there's the range. There's your top of the range. And as I say, when trading the range, you want to be looking to sell at the top of the range. Stop goes at the 127R, which is up here. So whilst it did false break the top, it would not have stopped you out, and you're in profit at the moment. Now, the market may come back up for another retest and failure. So, from a pound yen perspective, this is the area, a retest back up here at 183.81 is the area to watch. All right. If we're going to hold in the range. So it's already been profitable from that false break at the top. So does it come up for a retest and failure? So you can monitor that one. Okay. You can see down here, we false broke the bottom down here last week, but then run all the way back up this week. Well, this may have been down here at the start of the week. It's only a 4-hour chart. but we started to hold there and then run up to the top of the range. So we had a false break here. Are we getting a false break here to then trade back down? All right. And if I was to draw in a fib as well across that smaller range, we're going to have, if you go to the high level of resistance, which is at 184.009, which is the weekly level, the 79% level overlaps there. 62 levels is a fraction short of your daily resistance level. So that whole area up there is the level to watch for a retest. All right, so that's my last thoughts there on the pound yen. All right, everyone, I'm going to leave you with that. So have a good rest of the week and enjoy the weekend, and look forward to seeing you next week. Okay, thanks, everybody. Thanks, Blaze. Thanks, everybody. See you next time.